right. Um, what's up, guys? It's February 21st, and I'm gonna be reviewing the entire week. It's a Saturday, so we're just gonna jump right into it. Just start looking around, see what we see. Once again, yeah, watch for as little or as long as you want. I wish I wasn't so tired right now. Like I kind of feel tired, but actually, no, I'll be fine. I'll be fine. Actually, no, I'm fine. But I gotta get this done. So, okay. I want to review the week. First, understand what kind of weekly profile this was. Maybe not even just understanding weekly profile, but just I guess just looking at the week in general. So, um, yeah, where do we even start? Where do we start? um, Maybe let's start with Monday. Let's start with Monday. So Monday, let's take a look at what happened. I don't think I reviewed Monday that much. Oh, wasn't Monday a bank holiday? That's why. I didn't even trade Monday, did I? Was Monday a bank holiday? I think it was. It might have been, but I'm gonna still backtest it. So yeah, let's go back to Monday and look. Like I said, it might be a bank holiday. It might have been, I can't remember, but it's fine. I didn't trade it. But the reason it doesn't matter is because I can see we had some movement. So, well, oh, I guess this was Monday. Yeah, we obviously had a lot of movement. So whether it was or not doesn't really matter. There was tradable price action. That's the key. So, okay. Let's just start with true opens. For Monday, we had midnight here. Looks like London made high of day. Pretty classic. And we had London lows here. Whoops. Hey, what up, random guy? I don't know why, but I'm a little tired, but I'm having an energy drink, so you sound depressed. It's just because I'm tired. I've been working hard. That's why, bro. I'm just exhausted because I've been filming all day and stuff. Uh, anyway, I'm good, bro. I'm good. I sound depressed. Probably. I'm just tired. Okay, so we had London lows here. Yeah, I wish I could just always have engaging streams, but sometimes I'm just like exhausted. Okay. Honestly, this seems like super. Monday was a super textbook. London reversal, New York continuation day. Look at how obviously Asia accumulated. Asia accumulates. Dang, wait, this is actually kind of cool. We get Asia accumulation. Manipulation, distribution. Oh wow, we never used true session open. That was weird. Hmm. You know what though? This was probably Venom model. Okay, this is the perfect example of like my implied for value gap. Bro. Maybe I'm just not in the mood for this. I don't know what's going on, but it's fine. YouTube recommended while I was coding indicator. Let's go. Nice, bro. Yeah, just chilling right now. Just looking around, seeing what we have. Looking, starting on Monday because I haven't back tested Monday for this week yet. So we're just looking around. Honestly, I don't know. Sometimes, usually, I kind of just like get a vibe of what to look at, but I'm like sitting at the charts with a blank face right now. Like I genuinely, I don't know. I don't know. I'll probably get in the flow in just a second. So it's all good. Um, you know what? I wouldn't be surprised if this was a New Day opening gap. No? Hmm. $16 is a lot? What's 16? What 16? 16 what? Is there 16 people watching? That can't be the case, bro. There's no one here. It's 4 watching. Okay, alright, let's lock in here. Let's lock in. I'm gonna really focus. I'm just exhausted. So, my guess is it looks like right at 8:30 we started dumping. My guess is it was probably just an IFEG to go run liquidity. Yeah, right. You kind of see how we just generated all morning. We were delivering from essentially the Venom model, right? Where you have a candle that, well, you have the fangs, and then you have a candle in the middle. It's probably on the 2 minute. Yeah. Wait, no, that's not it. Oh yeah, look at that on the 2 minute. Could that not be more obvious that that's Venom model, bro? Whoa, wait a second. Dude, it's crazy if you just like, I don't know, just show up to backtest, you'll find the craziest things. Y'all see this Venom model, right? Yo, that's insane. Wait, so remember what I said about Venom model? Guys, go watch that video on Venom model. Venom. What's the song? Venom. Venom, 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 Venom. Dude, that is so sick. And then we have all this as low resistance liquidity. Holy crap. No, yeah, no wonder we didn't go up to True Session Open because this was just such an obvious Venom model. Boom. Wait, that's actually so sick. Once again, I think this was a bank holiday. This happens on a bank holiday, so it goes to show you, like, do these markets really care about what day it is? No, they'll work. They'll work whenever. The trading is trading. Period. Wait, that's actually so nice. And was there a low time frame true open? 752. So that got manipulated. Here we go. I'm starting to get in the flow. Dang. That is so sick. And then we could take this down to London low, which actually London low is equal lows. Wow. Wow, this is really cool actually. Oh wait, this is the Venom candle. So this is that's crazy. And then yeah, all the way down to London low. And then we start spooling. Right? We break old lows, hold for value gaps. This is so nice. If you had the patience to wait for this, you're a goat. Wow. That's actually insane. Only thing is, where's the buy side liquidity that we're supposed to purge? I guess we didn't need it here. Dang. Once again, LRLR is rocket fuel to deliver us to wherever we want to go. Does this look random to you guys? No. It happened at 8:32 though, which is before I would have got on. Well, 2 minutes after I would have got on the charts. 8:32 Venom on the 2 minute. And then if you didn't want to take the soup, pretty easily you could take the IPG. Right? Because then when we get this inversion for value gap, this is just perfect. This is a perfect entry. Wow. That's fire. Look at this trade, guys. And it's going into the macro. Once again, we start spooling right before the macro. That is insane. Once you see it, you can't unsee it. Bro, that makes trading just look so easy. This is why I got to get on the charts for sure before 8:30, because you will get this move, or like around 8:30, because you will get this move a lot of time, like exactly like this, where the 8:50 to 11:10 macro or 9:10 macro is what delivers price, right? This is a really, really good reason for why you should get on the charts at starting at 8:30. You think you took this? No way. Bro, this is such a fire trade. And you guys see how it's Venom model, right? It's very obvious Venom signature where you have the left fang, the right fang, and then the Venom candle that I guess purges this high here. And boom. Then we get the inversion for value gap off of it to go run the liquidity. So textbook. You just have to not you couldn't. I wouldn't go break even. I wouldn't go break even until the end of the LRLR, because once again, with this good of LRLR, why you go and break even early? I would not go break even early with this good of LRLR. It really is such a fire trade. Hopefully that makes sense though, guys. Like, you might be like, why didn't you go break even here? Because it's really obvious LRLR. That's why. Right? You would not go break even with such good LRLR until you at least run the LRLR. And then from there, you could honestly take profit there, or you could go break even and leave it to go for, or take profit one and then hold the rest for London equal lows. Because we do know here that the macro was coming. Yo, Jake, I want you to really back this one time and win. Honestly, hey man, I don't know what to say to you, bro. I'm not here to, I just hope you just comment positive things, because I don't want to have to debate right now. Okay, so once again, break even. Dude, this was so sick. And yes, I would definitely go break even there. Maybe actually the midpoint of the wick, like that. And you could have tried that one, but it would have been such a long trade. And you would have need to have your stop loss That one, it's tricky. That other inversion is tricky. But I like this one better because it's more obvious LRLR. Boom. 836. Inversion for value gap on the 2 minute. Once again, I feel like I'm kind of getting back in the flow. It is positive. I just want to see you get some practice in. I am back testing. This is so sick. And you have to wonder how people say macros aren't real. Like, come on, guys. Oh, random guy doesn't know the whole story with Ant-Man. Ant-Man just comes in my streams and I'm not trying to be rude to Ant-Man, but he comes in my streams and he kind of says, he's gonna say that he's not, but I don't know. Sometimes Ant-Man will say some stuff that's very, I don't know, not the most positive. Okay, anyway, let's just move on. We don't need to talk about it. Boom. There we go. 950 to 1010 macro. Yeah, guys, this is such a good trade. And then you could even take this back down to midnight open. Right? Imagine thinking macros aren't real. It's insane. 836 inversion for value gap, 2 minute, number 2. Yeah, I don't know. No, it's that's not real practice. That's not gonna it's not going to be the same as executing for real. It's just not. It's not going to be the same as reading price action for real. Okay, so I also want to just show you guys how spooling happened here, right? Look at this. If we go to the 1 minute, check this out. So once again, 950 to 1010 macro. From here, and I usually mark it from the draw on liquidity to from the entry or from the start of the macro to the draw on or from the entry to the draw on liquidity is usually how I mark out macros, because I don't know, because that's how I would take them, right? Here, I don't need the word macro. So 950 to 1010. We're obviously in a low resistance liquidity run. The 2 minute inverses, and then you can see how spooling is occurring here, right? We have a fair value gap getting respected here, right? This is spooling, guys. This is spooling, where before the macro, we start holding fair value gaps, breaking old lows. Like, this is how you know price is about to expand, is when it does this stuff, bro. When it starts to hold these fair value gaps, expand, and then go lower. This one's a suspension block. And when it does this, we're about to dump. Period. So sick. So this would be like a 2022 entry in my book. This would be like a 2022 entry. Either of those entries, because we were breaking old lows to go run low resistance liquidity. And we're going into the macro. This is spooling. This right here is spooling. I have a video that's coming out on spooling this week, right? So sick. Bang. Then we deliver lower. 5 watching? Let's go. I mean, guys. I mean, seriously, look at this. This is so cool. You could have taken the Venom entry at the high. From there, we inverse the 2-minute for value gap with obvious LRLR. From there, we start spooling. First holding a fair value gap and then holding a suspension block going into the macro. And then what? We dump to London equal lows. During the macro. I mean, come on, guys. Come on. You guys think this is random? Come on. Okay, so once again, this one right here is more of a fair value gap, and the way you mark out these is you include the volume imbalance in the fair value gap. So that's a 1-minute FVG, and then this one's actually a suspension block because it's a candle suspended between two volume imbalances. So even though it has this gap, it actually is a suspension block because you want to include the volume imbalances. So that's actually a suspension block. And suspension blocks before macros are really, really nice. Bang. And just like that, there you go. So it almost feels like a silver bullet. I don't know though. I don't think. No, because it's not 10 a.m. I'm being stupid. Don't listen to me, bro. Okay. I would try this. I would say this could be a 2022 model. Honestly, I like that. So I'm gonna mark this out. Yeah. One minute FVG to 1 minute SB. Okay. So I would take this one. Honestly, maybe put stop loss above there. Honestly, this is tricky. You could put stop loss there. I don't know. Sick. And then look at how much further we ended up going down. That's the crazy thing about trailing your stop loss is you could just trail your stop loss and you actually make like 2 or 3 times as much. That's insane. Okay. So let's go ahead and save that. Once again, 845. This is 845 2022 model. Because why? Because we had a sweep of liquidity, displacement below lows, and then a fair value gap. 845 2022 model on the 1 minute. Let's go ahead and save that. And then here's another one, right? Different entry though. And actually, this is a propulsion block too. Wow. No, wait. When you look at it like that, hold up. This is a propulsion block because we got OB, PB. Okay, now we're going to look at this propulsion block next. So I would consider this to be 2022 model as well. 849 suspension block. 2022 model on the 1 minute using a suspension block, but I consider suspension blocks for value gaps essentially interchangeable. 2022 model 1 minute, bang. And then yeah, we go lower. Once again, this is a propulsion block with the LRLR below. I wonder, did we have an RTH gap that we went and filled? Because if so, that would have been crazy. That would have been crazy nice. No, we actually, oh, there was no, yeah, because it was a bank holiday, I guess. Once again, if I can read price action, I don't care if it's a bank holiday. It's all about if price action is readable, and clearly it is. So, okay, from here, this right here is an order block. I know, right? Isn't it so weird how everyone hates on bank holidays? It's almost like they're wanting to gatekeep them or something. So here we have an OB. So this is a very textbook propulsion block, guys. Here we have an OB. Where's OB? OB. Do I not have OB? Anyway. So OB, and then we get another order block off of that order block. So this is a propulsion block, right? And look at the power of propulsion blocks, guys. Let me get rid of this for a second. I'm going to try and clean up the chart a little bit. So, once again, if you see a propulsion block with good LRLR, and this is right before the macro, what should go through your brain, right? We're probably going to use that propulsion block pretty aggressively. And so a good way to enter is literally just entering on that propulsion block like this. Because think about it, if you can enter off of OBs, because OBs are change in state deliveries, then why can't you enter off of PBs, which are also change in state deliveries? So with this propulsion block, My favorite thing about propulsion blocks is I would say you could measure out 7 projections of a propulsion block, and you'll usually be chilling. So there's 7 projections. Bang, 7 projections of the propulsion block. I guess we had a relatively equal lows here. So that's another place you could have targeted. You see how these are relatively equal? So that's exactly where I would take profit. Once again, going into the macro, a propulsion block like this is just going to be so nice. And you could have targeted 7 projections. That's kind of up to you. I like targeting 7 projections. I don't know. It's just kind of something that I started doing that I noticed is, for some reason, 7 projections holds somewhat well. And so I don't know. But that's more of like a personal preference thing. It really doesn't matter. So once again, delivering off of this Venom BPR, low resistance liquidity run. This is gonna be, as always, rocket fuel, right? This is gonna be rocket fuel to expand us to whatever drawn liquidity we're going to. Boom. And then boom. There you go. Rocket fuel to expand us. This accumulation, then manipulation is how the market is able to have a stop run to expand us to an opposing drawn liquidity. That's how. It's because it had been generating this whole range. That's how it works. So there's the propulsion block. There's a couple different ways you could take the propulsion block. One of which is just entering on the retest. So 848, which is perfectly right before the macro. 848 propulsion block on the 1 minute. And once again, why can I take propulsion blocks? Because if I can take a change state delivery, which is an order block, then I can take a propulsion block. And if I can take a propulsion block, if an order block is a change state delivery, then a propulsion block is too, because a propulsion block is an order block. So, and once again, you could enter on the close. Like I could have entered on the close of this propulsion block if I had conviction. Once again, relatively equal lows. This is exactly why I want to work on getting on the chart starting at 8:30, because if we're gonna get something like this at around 8:30, I know this is gonna be like a big move, so I want to make sure I get in on it. So 848 propulsion block. propulsion block number 2, propulsion block on the 1 minute. Yeah, that's fire. So this is the second way you could take it, is just on the close. And then the fun way, the most fun way you could take this trade is using Dynamis, which is something I haven't talked about in a while, but oh my gosh, it is so good. I have a video where I explain it, but I just made it members only, but I'm going to explain it for you guys, because whoever's watching this stream, you're a real one. So, if a propulsion block is a PD array, we know it's going to hold. It's a higher time frame key level. What can we do? We can align it with a low time frame change state delivery. So if I go to this is a 1 minute propulsion block, I can go to a 15-second or a 5-second and drop down, and then get a even more precise change state delivery here. So, okay, which one do I like the most? Yeah, maybe this. Either one, either this one or this one. But it's just cool how precise these markets are, right? So once again, this is my Dynamis model where you take a propulsion block and you enter on a low time frame, aligned time frame change state delivery. Boom. And notice how with this order block and with this propulsion block, we aren't even coming into the propulsion block, like we're barely moving into the bottom of it. We're not pushing up into it very far. That tells you this is very bearish. Right? It's like it's an IOFED for order blocks, essentially, is what it is. We barely tap into the OB and barely tap into the PB. That is extremely bearish. And essentially an IOFED for order blocks. You guys see what I'm saying? We're barely tapping into that order block. We're barely tapping into that propulsion block. What up? How's it going, Bajit? How's it going, bro? So this is my Dynamis model. Once again, I've just made that video members only, but for you guys, ones watching the stream, you get to see it. Basically, you take an aligned time from change state of delivery off a propulsion block. And then, once again, this was during the macro. Super, super nice trade here. So, that's how you get even more RR off a propulsion block. OB, PB. Boom. I mean, guys, look how precise these markets are. You realize how insane this is, right? Like, this is so precise. This is crazy precise. Once again, this is my Dynamis model. So 8:59 Dynamis, 1 minute, aligned with a 15-second. I'm a beginner. Can you help me, brother? Of course, bro. Of course. I would recommend just binging my short form videos from the very beginning and just watch all of them. If you watch all of those short form videos, you're going to cut your learning time in half because, like, genuinely, like, I mean, you can either watch all of the stuff the other way, which is long form, which from other people, and it's going to take you, like, uh, you know, thousands of hours, or obviously my short form videos, there's like hundreds, but bro, you can learn all of that with just short form videos that are less than 3 minutes. I think it's worth it, bro. I recommend watching all my short form videos and then watching my market recaps, because then I show you how to apply everything in actual trades. How long you been doing trading? 2.5 years. Yeah, this really is free sauce, guys. This is awesome. Once again, 8:59 Dynamis, 1 minute, propulsion block aligned with the 15-second. And why do we know that we're gonna go lower? Because this LRLR, it tells us that we're in a low resistance liquidity run, and we're probably gonna expand to opposing liquidity pools, which in this case is relatively equal lows. So we had Venom model at the high. We had an inversion for value gap on the 2 minute. We have an order block. So what is this, by the way? This is a change of state of delivery trade. So if you wanted to take this as a change of state of delivery trade, you could, right? Let's go look at that one. Right? You could have taken this as a change of state of delivery instead. So just rename this OB to a change of state of delivery, and all of a sudden now it's a change of state of delivery because OBs are change in state of deliveries. So boom, there you go, CISD, right? This order block takes liquidity too, and we're probably delivering from a 15-minute gap. What first step should I take? The very first step, bro, I would just binge all my short form videos. That genuinely, that's just gonna save you so much time. If you don't want to do that, then I don't know, bro. There's no easy way. There's really no easy way to do trading, in all honesty. Also, something else that I've learned recently is I've learned about the official ICT implied for value gaps. And so that's something that I didn't really understand. So I have my own implied for value gaps, but then ICT has his. And I like both, honestly. But this is the ICT implied for value gap. You take the midpoint of one wick, and you take the midpoint of the other wick. So this is when two wicks overlap, and then you use the midpoints as your fair value gap. So this is an implied 15-minute fair value gap right here. Well, I don't know, because this wick kind of makes it maybe this wick makes it not an implied fair value gap. But I have my own implied fair value gap, which I actually honestly like a little better, but I'm not going to sit here and say I don't know what the ICT version is, because I do. I think it's good. I think both are useful. But yeah, this is the ICT implied for value gap. And so you can see how the market respects this. Boom. So 15-minute for value gap. Boom, boom, boom. put ICT in parentheses just to signify like this is ICT's version. This isn't my version. So boom. Then we get a 1 minute change in state. So 15 minute aligning with the 1 minute. Bang. And we go run all that liquidity. So like I said, you could have just taken this literally as a change state delivery here. You could also mark it out like that. Whoops. Yeah, this is super valid. This, if you take this as a change state delivery all the way down to the relatively equal lows, this is 9R. That's crazy. But you guys see why it was really obvious what the bias was, right? Because we were just generating liquidity, and then we finally got the macro, and we finally went to the relatively equal lows. Boom. I've been looking at this same segment of price for so long, but I really don't care because I'm loving looking at all the different versions of this trade. I mean, wow. So it's like there's so many different ways to get an entry within the market. It's so cool. $8.37 CSD on the 1 minute, and I'll also save the same exact thing as, well, yeah, learn the basic stuff first, and then 8.37. I'll also consider this flow state because it is flow state. It's a 15-minute key level, a 1 minute change state delivery. So what is flow state? It's just aligning a higher time frame key level with a lower time frame aligned time frame change state delivery. So flow state, 15-minute, 1 minute, 9.37. Saving that. Boom. Then psychology, then support and resistance, then watch TJR, then Jake. I love it, bro. Yeah. You could definitely start out watching some TJR. Oh, you know what? But gee, I don't know if you're still here, but I actually have a really good way for you to learn. Start watching Dodgy's Bootcamp from beginning to end, and you'll learn like a crap ton. And it's pretty good for a beginner to start out just going into Dodgy's Bootcamp from the beginning. You can learn a lot just by watching Dodgy's Bootcamp. So that's where I would go. Watch Dodgy's Bootcamp. There's like 40 episodes, but if you're serious, you'll watch the whole thing. And, bro, that's going to be probably your fastest way to learn, I would say, is Dodgy's Bootcamp. Kind of forgot about that. But, yeah, I would start there, bro. Start there. If you're still here, Brigitte, go to Dodgy's Bootcamp. Okay. That was just so cool. I loved backtesting that. So if it's my own version of implied for value gap, I'm not going to put parentheses ICT because it's mine. This one's ICTs. But this one, I don't know if it counts as ICTs because it has this wick as well. But you know what? I don't really care. It's fine. If it works, it does its thing, and I don't really care. So, okay. Yeah, then we just kept drawing lower. Whoa, December. How did I get to December? So, yeah. This is why I need to get on the charts at 8:30, right? Because if I don't get on the charts right at 8:30, I'm going to miss moves like this, which are just really, really nice. This is exactly why I got to get on the charts right at 8:30. Because if I don't, I'm going to miss these moves. Boom. It's a note for myself. This is why you need to get on the charts starting at 8:30, or else you will miss these moves. Okay, so now let's look at something else. Maybe like lower down here. See if there was an entry down here. Oh, nice. There's 6 watching. Let's go. Yeah, let's go ahead and look down here now and see if there was any entries down here. Maybe a first presented for value gap or anything like that. So, yeah, let's go ahead and go do that. Let's clean this up. So, yeah, there you go. We go lower. Once again, there's no... This is on a bank holiday, once again. Like, if I can read price action, do I care if it's a bank holiday? No. No, I don't care if it's a bank holiday if I can read the freaking market. Why would it matter? It doesn't. If I can read price action, it's tradable, then I'm going to trade it. I'm going to trade that. It's so stupid, bro. I literally, this is why I always say, ignore everyone, guys. If you can read price action, don't give a crap what anyone else says about what you can or can't do. Because the market's the greatest teacher. I'm so sick of these, like, people telling you what you can or can't do, which, honestly, they're probably not even profitable. So we had the first presented for value gap here. And this is a tiny one. I see often says not to use the tiny ones, but you could use the tiny one here. And that actually works. You can also use the lower one here. Either one of these inversions end up working. So something to consider is just a simple first presented for value gap inversion here. And then you target these low resistance highs. And yes, I would consider either this one or this one as the first presented for value gap, because it's kind of like what ICD says. If it's too small, I use the bigger one, but honestly, you can use the smaller one too. Either one will work. So there you go. Low resistance liquidity, bang. And then we go run up to those highs. So this is a nice 1.9R, and you could probably go break even at, like, I don't know, like maybe like here. I mean, you could also do it a little bit higher up. It really is kind of a personal thing. Break even, you know, figure out where it makes sense for you to go break even, but you could also have taken profit at the end of these bodies here. Either one. Probably go something like this. So there you go. LRLR. Boom. We go up. Run it. Break even. And then I would TP at the end of the LRLR here. Like that. Well, let's see. Does that even... I wouldn't even have hit TP. So I would have gotten... TP here. That would have been close. So sometimes it's better just to take profit when it's kind of looking like for instance, this volume balance. Maybe you just take profit at the volume balance. Also, guys, I know how volume balances form now. I understand it now. And I understand how liquidity voids form now. Before I didn't, but now I finally do. which is kind of cool. So I'll probably make a video about that at some point. But I just didn't understand, like, before 2005, 2003 to 2007, markets actually didn't really look this smooth, actually. This is something I didn't know. But, like, if I go, sorry, I'm going on a little rant here. But, like, if I go to, like, for instance, ADA futures, like, check this out. There is, like, no liquidity. You can see how it's just super spotty. Look at this, right? It's super spotty. Why is it like this? Why is it like this? Well, one, the futures contract just came out. But two, there's not what's called automated market makers yet. What they do in big institutions is they're placing automated limit orders at every single tick, and it's automated. And so basically they're profiting off the spread, because when you enter at market, you're buying the next closest limit order. So this little spread between the market and the limit is, for every little tick, is going to be like, on NASDAQ futures, it's probably like 50 cents for a micro contract. But if you do that, what they're doing is they're doing it 100,000 times a day, right? So they're placing limit orders at every single tick 100,000 times a day. So what is that doing? They're making 100,000 times 50 cents a day. So that's what like institutions like Citadel are doing, is they're putting limit orders at every single tick. And so that's what prevents these spotty markets where there's volume imbalances and liquidity voids everywhere. That's why you go on NQ and it's super smooth, because there's actually automated market makers to allow price to move smoothly. But this is something I just learned about today, so I'm going a little tangent. Yeah, ADA is an insane project. Dude, thank you, bro. I'm never giving up on it, because here's the thing, bro. Like, I liked it in 2021. Nothing has changed. Nothing has changed. It is a fundamentally strong currency. And just like Bitcoin, you see Bitcoin succeeding. Just like Bitcoin, I mean, I did a whole rant on it. You can go watch the rant, but it's like, you have a decent amount of it. Really? Yeah, bro. I kind of see it. Don't expect it to go up right away. I'm going to be accumulating indefinitely. But dude, like, I see a world where one cryptocurrency doesn't rule. I see a world in crypto where many cryptocurrencies will rule. Bitcoin obviously being one, but also I see Cardano being one, because it actually, like, what's the word? What's the word I used? It is robust. It is robust. You can't kill. It's decentralized. You can't kill it. It's impossible to kill something that's decentralized. It's exactly like Bitcoin, just a different mode of validating the blockchain. So you see what happened with Bitcoin. The only reason Cardano is not going up is it hasn't yet, because but it's inevitable, right? It's just like Bitcoin. Bitcoin lost 90% in 2011. Didn't matter. I really do believe that, but that's just me. Okay, anyway, that's enough talking about Cardano, bro. We're focused on trading. But yeah, like I said, like, I don't care. It's more like, for me, it's more like a 5 to 10 year, even longer type of thing. Like, I don't really care. So I don't. And if it goes lower, then I get better prices. So okay. Anyway, but you guys get what I was trying to say is the reason that these markets are spotty is because, or the reason that voids. So the reason that voids occur in the market is because what happened is instead of putting limit orders at every single price level, they kind of like, they didn't for a second. And usually it's just because of like a high volatility moment or something. But what happens is if I market buy, this is kind of cool. I didn't know this either until today. But if I market buy, and let's say that the market, let's imagine a market where it's just like, this is not obviously realistic at all. It's like kind of impossible in any market because it's just, there's always going to be liquidity in every market. But let's imagine a market where there's only one. Let's imagine a market where there's only 5 limit orders in the order book. So there's only 5. So we got them all up here, right? And the last traded market price is all the way down here. So this is market price. This is the next limit order in the order book. Even though market price is here, if even though the last traded market price is here, if I market buy, I'm not going to get filled here. I'm going to get filled at the next limit order in the order book, which obviously this is an extreme example because this would never happen in real life. But imagine if these were the only limit orders in the order book. I would get filled at 327.25 when the market price from previously was here. And so that is why a void gets created, a volume imbalance, a liquidity void. That is why liquidity voids get created. Because when you market buy and there's a gap in limit orders, that is why. But the reason there's never gaps in limit orders is because hedge funds like Citadel put automated limit orders at every single price level on every single tick, so that way there's never going to usually be voids besides when it's like extreme volatility. It's kind of crazy. I didn't realize that, but that's why. So it's kind of cool. Anyway, I don't know. I was going a little rant there, but I just think it's so interesting. Like if I market buyed and there was no liquidity, I would buy this limit order all the way up here. It is just interesting. Okay, anyway, let's go back. What was I looking at? Oh yeah, the first percent for value gap getting inversed. Dude, I learned so much every day. Like, you would think after trading for 30 months, you would think you just learn everything, but you don't, bro. And you never stop learning. I never stop learning. There's always something new that I learn. It's crazy. I literally never stop learning. There's always something new. Blows my mind. So yeah, here's the tiny first percent for value gap getting inversed, and then this one as well, which is maybe a little better because this one's a bigger bigger gap. So boom, what, 954? Okay, I don't have it saved yet. Let's go ahead and save it. Let's see how many people are watching now, if anyone. Oh dang, there's 8 people watching now. That's crazy. Yeah, anyway. Like, I learn so much every single day. I genuinely don't know how I keep learning, but I literally I don't know. I just do. I just keep learning, bro. 954. First presented for value gap. Inversion on the 1 minute. Okay, and then same with this gap. So you might be like, this isn't the first one. This isn't the first one. Well, ICT said that if it's small, you're not even supposed to use the small one. I've found that both of them will work. But anyway, point is, this one's going to count as a first presented for value gap IFG as well. So that's the point. So I'd go break even at that high. Once again, TPing at the LRLR here. And this is also an inversion for value gap. So we have so many different IPGs here. Now there would be an external gap. So I would probably have waited for this one to break. But yeah. You might be, once again, you might be saying, well, that's not the first time for value gap. Once again, it is according to the definition of this one being too small. 950 1-P IPG on the 1 minute. Bang. So, anyway. What next, guys? What next? We obviously continued lower. Came up to this gap. So this is where we want to actually look, because this is around my live trading window. So this is where there would have been a lot of opportunities possibly. We ended up forming a CRT here. So this is Genesis model that I once again, one of my things that I don't even know how to explain it, that I discovered, where you basically look for a series of candles and then CRT and then enter on the CRT back down. Go, if you want to know what that is, go watch the video on CRT that I made. I'm curious if we have a new week opening gap that we delivered off. What the heck? I spawned that new week opening gap in, bro. I literally spawned that new week opening gap in. That is really funny, actually. The fact that I said, oh, I think we might have a new week opening gap, and then we do. You want to know how I knew? Because we formed a pin bar off of it. So this is hand of FA probably as well. That is so funny. I was like, I think there might have been a pin bar here. Imagine thinking you can't trade bank holidays, bro. Imagine thinking that. That's so stupid. Bang. So, and then you could also target this low. That actually might be better, because this is the low. The reason this is CRT is because I consider CRT to be also a series of candles. So this is a series of green candles. We get a CRT candle, and then right on that CRT, enter to target the opposing end. Bang. So I don't know if that one, I don't think I would take that really ever, honestly, but I just want to mark it out because I think it's interesting. I don't think I would take this. I think it's too risky for me. I don't think it's realistic either. 10-10 Genesis on the 5 minute. But I think what I would take is that I would take this as a pin bar off the new week opening gap, and I'll show you what I mean. So I would take this, since this is a pin bar. It's a pin bar on the 5 minute. It might even be better on like the 3, or actually it's almost definitely better on the lower time frame. Wow, yeah, the 3 minute is so nice. Wait a second. No, that 3 minute is crazy. Do you guys see that hand of FA trade? Oh my gosh. You guys see hand of FA? Pin bar at the high of that new week opening gap. Jeez. That's 13R. Guys, this is crazy. This is straight sauce, bro. Oh my gosh. pin bar. Boom. Where's it? Where's it? Where's it? Where's it? Where's pin bar? So there you go. That's Hand of FA right there. And it might be Seal of FA. Do you guys remember what Seal of FA is? It's even better than Hand of FA. Do you guys remember? So 1006. 1006. Hand of FA on the 3-minute. It's when if another asset, so like ES or YM, has a different colored candle as the pin bar. It's called the precision swing point. So you can see this is Seal of FA here. Do you see why? Because on S&P, this is a green candle. On NASDAQ, this is a red candle. So this is Seal of FA. Bang. And we have an SMT there too, which is just crazy. Yeah, you can see there's I think there's SMT there. It's kind of hard to tell actually. But it doesn't really matter. It's still a good trade. So 1009 or 1006 Seal of FA. And the reason it's Seal of FA is because it's a precision swing point. What was I gonna start marking this out as? If it's a here, I need to get my phone. What was I gonna start? I was gonna start marking out as see what I put in my notes. Okay, so notations. I was gonna mark it out as PP, but I don't know if I want to do that. For precision pin bar, I think I'll just do PSP, honestly. So this is Seal of FA. Bang. $10.06 Seal of FA on the 3-minute. Number 2. Okay, next one. I want to go on the 1 minute and see if this was a thing as well. Be interesting. I wonder how many people are watching, if any. Oh yeah, no one's here anymore. Very good, boy. What? The PP model? Everyone left, guys. Everyone left. Now we can journal the good stuff. Well, this one was probably, hold up. This one was probably a pin bar as well. If I had to, I don't want to check. I'm just gonna write this as a pin bar here. So you could have tried that pin bar as well. So this one's just regular hand of FA. Unless it was it might have been um it might have been a precision swing point, but I really don't care. I still like this. Obviously these are not like everyday type of trades, but I do like back testing them because it's just cool to me. It's just cool. 10:06 hand of FA on the 1 minute. All right, now let's go ahead and look at something else. We obviously have a change state delivery off of the new week opening gap here. So there's your shadow entry, right? Jake trades at shadow entry. It's crazy that I knew that that was gonna be a new week opening gap there, though, honestly. And oh, and then this is also an implied for value gap as well, an ICT version of one. Oh, and look at the breakaway gap too, by the way. Look at the breakaway gap. That tells you a lot about price action. If we're getting a breakaway gap here, and look at how that like basically top ticks it. And actually, you would want to enter once again with these order blocks. A lot of time you can just enter on the wick because just to make sure you get filled. That's what I do. I go stop loss above the high of that candle. And then project this out. Honestly, maybe project out just the green candles here. There's 4 projections, there's 7 projections. Bang. So once again, this is my shadow model. Never made a video on shadow model yet. And I need to. But it will probably only exist for only so long, and then I'll make it like the rest of the concepts that I've discovered. I'll eventually switch it to just to be extra content that you can get if you want to get the membership. But I'll initially make the shadow model video and then I'll make it public. No, you're good, bro. You're good. You're good. I kind of probably need to go soon as well. But dude, I feel like you just get a little better every day. It's crazy. Yeah, I really do feel like that. Boom. And honestly, you can mark this as a change of state of delivery as well. But yeah, you're good, bro. You're totally good. Sorry, I was kind of tired at the beginning of the stream. I don't know. It's so weird. Like once I get in the flow, I'm chilling. Bang. Then we sweep out these highs here. We'd mark it out as these highs too. Ooh, I want to check true opens. Let's check true opens. Do we have a low time frame true open here? Ooh, where's our 922 true open? Oh, that is sick. Oh my gosh. Whoa. Check that out. Wow. That is so sick. We come back, we reutilize the 90-minute true open. And then we... Wow, bro. Wow. That's insane. Alright. Yeah, we reutilize the 90-minute true open. Where's the 22-minute true open? Whoa, 1013 forms, we wick into the order block one last time. That's insane. Now that wick right there, that is true alignment of time and price. That's cool. That's really cool. Anyway, the first tap we don't have 1013 yet. And obviously you could have targeted further, but you could have also targeted less if you wanted to. Let's see if there's anyone watching now. Maybe no one's watching now because random guy left. Oh, four people are watching. Let's go. Yeah, yeah, this is a fire trade. So this is my shadow model, new week opening gap. Shadow model. This is at 10:12. Shadow model, new week opening gap aligned with the 1 minute. And also, if you wanted to, you could take this change state delivery close, but I don't know. I probably wouldn't because of that wick. So, okay. Next thing I want to look at is how this is. This is an implied gap. So this is a true ICT implied gap where you have one wick here. Once again, this is the ICT version, not my version. But I'm actually kind of liking the ICT version a bit. I think my version's useful too, though, for different reasons. Like, it's just different. It's a different thing. So there it is, bro. Wait, whoops. So there's your ICT implied gap. Boom to boom. So you measure out the left wick, measure out the right wick, and there you go. There's your implied for value gap. So now all of a sudden, you have a 2022 model, right? Because we've displaced below this low and this low, especially on the 30-second. It's pretty clear, but once again, we're getting displacement. You'd also mark displacement out there. Boom, boom. Here. And then what the? That's not the one I wanted. Anyway. Oh, I know what one I want. Bang. So with this 2022 model, let's see, how could we take this? I mean, I know how I'm wondering where would we take profit here? Well, I would put stop loss above the break. Actually, I put stop loss above that candle. And then I'd project out this whole thing. And yeah, you could just target 2 projections, or you could target 3. See how 3 projections holds? This is why I study my own stuff, guys. No one uses 3 projections. No one. Not ICT doesn't use. I mean, maybe he does, but bro, I just do what makes sense to me. And let me tell you, if you can do projections at 2, you can do projections at 4, you can do projections at 3. It's just a projection. That's all it is. So. I would just maybe go like that. It's not in a macro time, though. That is something that I do not like. But still. So 10/12, 2022 model on the 1 minute. And how could you have gotten this bias pretty nicely? Because we got a pin bar at the top of the new week opening gap. So you knew, okay, we're already in a seal of FA trade. So, okay, 10/12, 2022 model on the 1 minute. Saving that. So now I want to take a look at the 30-second and the 15-second because it's probably more clear the way that we start spooling. Yeah, because on the 30-second, this is a real fair value gap on the 30-second. On the 30-second, this is a very, very real fair value gap here on the 30-second. Oh, I know something else I wanted to look at. Oh my gosh, okay. One more thing I gotta look at is I've been watching the ICT 2025 mentorship. And there's something really cool about putting a gradient on these wicks. So I'm gonna do that. And the reasoning is because um your fair value gap for the 2022 model is gonna form at the quadrant level. Like this. See, we tap that, we tap this. So I think anyway, we obviously respect these, right? Boom, 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 boom. But I was expecting it to form right there a little bit. But basically, it's going to tell you what fair value gap to use for the 2022 model is what the gradient does on Wix. You just put a gradient on Wix. But I need to get better at that. Okay. So I'm going to also mark this out as a 30-second 2022 model because I just think it's very, very clear as a 30-second. And what you end up getting is my Khufu stack. My Khufu stack, where you have... Let me make this a little bit more transparent here. What you end up getting is my Khufu stack, where you get... I actually like the sweep of these equal highs here. You have a rejection block, which I'm curious if there's SMT with it. Yeah, it's so weird because it creates equal highs on S&P. Oh, what about YM? Let's check YM. It might have been SMT with YM. Man, I guess there's not SMT. Either way, it doesn't really matter. Well, actually, it does matter. Because if I'm going to take Phoenix model, I want to see SMT. Where is it? Why do I have to scroll back so far every time? Dude, bank holidays are cracked. I don't know why people don't like bank holidays. So, honestly, guys, maybe you could consider equal highs SMT, bro. I mean, I feel like maybe, honestly, I'm just gonna allow myself to do it. I've never done this before, but I'm gonna consider equal highs with a higher high SMT. Dodgy said that I asked him like a long time ago if you can if equal highs with a higher high were SMT, and he said no, but honestly, I don't really care what Dodgy says. But I'll have to back test it more. So let's see if anyone's watching. I don't think there's as many people watching now because no one's talking. Oh, there's 6 watching. That's crazy. So yeah, this is my Khufu stack where once again it's very hard. It's like difficulty level like 100, but it's really cool. So I have to show you guys. I have to show you because it's just so cool because it repeats itself all the time. We have what'll happen is you'll get Phoenix model at the high. Oh, and you know why equal highs might count as SMT is because um the reason is probably because uh like maybe like the micro version did create a higher high or a lower high or something, right? That's probably why. And then so what'll happen is you'll go from the rejection block, so the Phoenix model, to the 2022 gap. Why is the 2022 gap? Because we got displacement below this low. We also formed a breakaway gap. It's all delivering off of this new week opening gap. Once again, our optimal entry point being above the true open. Oh man, it's crazy precise. Like it's crazy. Like what the heck? I can't wait to catch a Khufu stack live, bro. That's gonna be like the coolest day of my life. And okay, and then what else? What else? Then you look for a breaker and for value gap. It's like this. Once again, difficulty level 100, bro. If anyone does this ever, you're the GOAT. Okay, breaker, and then bearish gap. Once again, include the volume imbalance in that gap. And I'd mark the break like that. So there's your bearish for value gap. Overlap with the breaker. At the high. So this is something else to know, guys, is you actually want to mark out the gap like this. I don't really care though. I'm gonna mark it out like that. I didn't see the volume balance, but I don't really care. I'm gonna mark it out. Yeah, this is an interesting one to see if there's a GB range here. This would be very interesting. If there's a Gulbach range and it fits within this, that'd be crazy, but I doubt it. Because, once again, this is the kind of thing where I could see it. It might be. If it is, that's crazy. Okay, it was too high. Wow. It is, bro. It literally is. See what I'm saying? We sweep liquidity into the dealing range high, sweeping liquidity, boom. SMT with ES. That's actually so cool. But you guys see why I like it? Because you can see here's this gap, this 2022 gap, and what partition is this? The fair value gap partition, right? So it's exactly where the fair value gap should form. It's above the true open as well. Once again, sweeping liquidity into our dealing range high. So 81 high, 81 extension, pin bar off of the 81 extension. And then take this to the dealing range low, baby. There you go. Dealing range low right here. These type of trades with the gold block levels, taking them to the dealing range low, you're going to cook, right? Oops. Oh yeah, and once again, the most important part is that. Hi, bro. If you can see, say hello. 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 What up? How's it going, bro? You have doubt about what? What do you have doubt about? You have a doubt. You have a doubt about what? How are you finding retracement gonna happen, bro? What? What are you even saying right now? Oh, wait, let's include the breaker partition, because I want to see, did the breaker form in the breaker partition? That'd be crazy. That's the mitigation block. Nah, the break room for value get formed in the liquidity void partition. That's sad. Okay, what were you saying? Like, after higher high, how do you identify when the market's going to reverse to POI? Because of backtesting, remembering the signature and price that you've seen a million times, understanding the draw on liquidity. Give one example, please. Okay, once I'm done with this, bro. Hang on. Just hold on, bro. So, once again, this is Khufu Stack, and it's a dealing range. Oh my gosh. People. You really think Ice-T's gonna tell you everything about these markets? You really think he's gonna say every little thing about what is really going on? Nope. There's some things that are just too good. Oh yeah, I'll give you an example in just 1 second. So, let me mark this out here. Y'all see it? The Khufu stack, right? From the Phoenix entry to the gold buck 2022 gap to the breaker for VI gap. I'm just having fun at this point. Once again, not really super realistic here, but I don't know. I just like to... Actually, let's, instead of doing that, let's just show the arrows. Okay, I will give you an example in just a second, but I'm finishing this real quick. Okay. What kind of science experiment are you doing, kid? I'm doing real science of financial markets, not fake, stupid science that they teach you. Well, it's not fake. No, but this is the real science of money right here. Okay, boom. There you go. Khufu stack right there. Okay, if good, are you still here? I will do your question now. Are you saying or not, bro? Yes, I'm saying, bro. How do you know? The question is, how do you know? I feel sorry for you. I really do. I feel sorry for you too. Because you're never going to understand anything about how markets move. That sucks to suck, bro. I'm right. That what you just saw was not the basics, bro. That was just interesting stuff that I like. But okay, your question, good. Like after higher high, how do you know when market will reverse? Because what will happen after higher high? How do you know market will reverse? What I was showing you was the more advanced stuff. I don't trade that way. I literally do not trade like that at all, period. I just like observing the precision that occurs in these markets because I think it's fascinating. I'm not saying that I could trade that way. I don't think I could. I think that would be really hard. I trade very simply. I trade AMD. I trade a change state, an inversion for value gap, a simple entry model. I don't complicate it. But what I was showing you is that these markets are incredibly precise. I was showing you the precision in these markets. That had nothing to do with actually how I trade. I just like observing the precision. Dude, Shaquille, you can leave my stream, bro. You can just leave my stream right now, Shaquille. I really don't want you here. You can leave. You can just leave. Okay, I think he's gone. Yes, bro, I trade very simple. I just observe. I observe the precision in these markets. It's not my fault that you don't understand how precise these markets are. I don't feel the need to try and convince you either. Because guess what? It's not for everyone. But I enjoy looking at the precision, and that was just me enjoying it. And then I get hate for saying that I'm trading stupidly because I'm looking at the precision that occurs in the market. Bro, just leave, bro. I can enjoy looking at the precision, but then still take simpler trades that are actually realistic. There's just there there is a lot of isn't it precise in hindsight? It's precise in hindsight and the future. The hindsight was the future. The hindsight was the present at one point. If the hindsight was the present, the hindsight tells you about what could happen in the present in the future. Okay, it's a key level. Basically, the answer to your question is a inversion for value gap or a change state delivery. And the way you know is it's gonna be obvious the market is ready to go run liquidity, right? You want to see like this, like how do I know when market will reverse? Because it's going to be an obvious alignment of time and price where we're ready to go run liquidity. So like let's take that one from Monday where we're just looking at, right? We have on Monday we had where is it? Okay, we had all this generated liquidity, right? This is how you know. This is how you know. We have all this generated liquidity, okay? We have all this generated liquidity. We accumulate. We accumulate. We manipulate. And at this point, once we get our change state delivery, once we get our inversion for value gap, that's obviously manipulated the range highs. Now we're ready to reverse. That's your answer. That's your answer. When you get an inversion for value gap, a change state delivery, a displacement and for value gap, these are, it's obvious that we're going to go run liquidity towards a drawn liquidity. That's how you know. I think I'm done with this stream, bro. I'm kind of, yeah, I'm feeling kind of done, bro. Hey, I got 2 subs. What? Let's see how many people are watching. There's 8 watching. Yeah, that's a lot. And also, let's say something I backtest isn't technically correct, right? Well, I'm going to find that out the more I backtest. So if I see something that's not working, I'm going to stop backtesting it. But I backtest to get better at understanding, and then I trade live to get better at executing what I understand. But I just enjoy the precision in the market. And I shouldn't get hate for just enjoying that the market is stupidly precise and it's going to respect very specific levels. And yeah, it's not realistic to trade, at least not for me, not right now. But that doesn't mean that it's not happening. And the fact that it is happening, it should really, really open your eyes, actually, to the possibilities of what is truly possible in these markets. Anyway, I think I'm gonna end the stream. What up, Sai? How's it going? It's a nice inversion for value gap there. That's a nice outside bar. You see how many trades there are every single day? Here's an outside bar right here. Boom. Here's an inversion for value gap right here. Boom. There's so many trades every single day. This is actually crazy. I'm gonna mark both of those out actually because I think they're cool. There's actually so many trades every day. Outside bar. Bang. What's an outside bar? when the candle after the prior the candle after takes the prior candle's low and high. Bro, Shaquille, bro, I told you to leave, bro. Why the freak are you still here? I wasn't hating. I saw myself in you when I started. That is why I felt bad personal. Carry on. I hope you find success or stay successful. I genuinely, like, I I was enjoying looking at the precision in the markets. That doesn't mean that doesn't mean that I trade that way, right? I just do it so I can learn, so I can get better at my understanding as the markets as a whole. Okay, I don't even want to talk about this anymore. Okay, but yeah, this is a nice outside bar. We obviously have an external gap here. It kind of depends if we had SMT here, if we were delivering from a key level, but you know, I don't really want to go into all that right now. I just want to observe the fact that this is a decently good outside bar and we went higher off of it. So you could project out this outside bar. There you go, 4 projections. I mean, bro, I've been trading for 30 months now, 2.5 years, basically nonstop every day. So I know a thing or two. Not like I don't know how to trade basically. I just enjoy the looking at the more advanced stuff because it's fun. It's fun to look at what is actually going on a deeper level. There's probably SMT here, in all honesty. Okay, I'm doing this one, and then I'm journaling the inversion for value gap, and then I'm done. You funded through props or your own capital. I'm done with props. I am so done with props. I was trading with props. I had been funded 700,000. I got 6 payouts. I know not a lot, but like a big reason why is because I choked. But point is, I'm done with props because I just see through it all. It's so stupid. I can, once I, get super consistent, I want to be able to I don't need to get rich right away. I don't need to. I just want to make consistent money trading. So what does that mean? That means I'm fine with just trading on a personal account because I don't care about making $1 billion right now. I just think it'd be cool to make consistent money trading. That's it. That is the reason why I am done with props, is because going into this mindset of I'm gonna be a millionaire by 3 months from now. It's like it just gets you cooked and it gets you paying the prop firm fees every month, and it's saying a $50,000 account. It's really $2,500, and you have to pay for the activation fee, and you have to pay for the eval every month, and you might not even pass the eval. And then when you get the funded account, you have to deal with all the rules, and it's only $2,500 really on a 50,000. Might as well save 2,500. All right, 11:04 outside bar on the 1 minute. And then I really like this inversion for value gap as well, down to this low. Once again, I'm not exactly sure what the other confluences were, but I like both of these trades. Regardless of if there were other confluences or not, I think that these are textbook. Yep, they're so annoying. Alright, here we go. So outside bar here, inversion for value gap here. And now I'm going to probably be done. I'm going to probably be done. All of these trades occurred on a bank holiday. What does that tell you about what other people say about bank holidays? $11.32 inversion for value gap on the 1 minute. Okay, yeah, I'm done. Let's see how many people are watching, and then I'm gonna end the stream here. But I appreciate you guys. Hey, we still have 7 watching. Yeah, I'm gonna end the stream here. I do appreciate all you guys, and I think I learned a lot today. Actually, I'm really liking the ICT implied gaps. I like my implied gaps too. I like both, and I'm really liking suspension blocks as well. Anyway, I'm just gonna keep getting better. Appreciate you guys. I will see you guys in the next one. Peace out.